to the Trading Bell Show. We have pitched camp today at ISIFA, that's the Institute of Certified Investment and Financial Analysts. I'll be speaking to Diana, the CEO, on the latest research they have done about the investment landscape in the country, challenges facing even the retail investors. And I want you to come and let's try and unpack and see what can we do better as a country to have everybody onboarded. Welcome. Diana Muriuki, Maina, welcome to the show.
Thank you, Maina.
First of all, I must acknowledge that it is a very good thing to always be informed on what is happening. But I'm curious to ask you the question of, we have a new government in place and they are talking about the bottom-up economy. And I have seen that you now conducted the detailed research, especially on how the retail market is doing. My question then is, what informed this? Is it to be in line with the government's agenda?
Maybe I'll start by saying there's a time for everything under the heavens and under the sun. And believe it or not, we had started this research back in 2021. So I feel like it is just an alignment with the times, and even the time of launching, it just came at the right time to address the matters to do with individual investors.
Okay.
Yeah.
That's a good one, and I'm sure the government is also happy because at least you informed them on how to even get better to the retail market. There's certainly a need to become better, especially in these markets, because I mean, one can just imagine if all the retail market that we're trying to target got into the market, how vibrant this would be. And we have seen this in cases like in India, where the activity is quite large, especially with young people. A lot of people investing and looking at, the stock market and even the capital markets in general as a place to think about it. My question to this is, do we have an appetite from your own sort of general view in that research? Did you see whether we have that appetite for people yearning to get into this market?
It's a good question, Maina, and maybe I'll start by defining what a retail investor is, because unfortunately I have seen it being defined as an investor in a supermarket.
So it's not just a supermarket.
Yeah, that's why I say individual investor, because a retail investor is just an individual investor. Like Maina, we want to get into the stock market as an individual to meet your goals and needs. So that's a retail investor, not someone who goes invests in a supermarket.
Okay, that's a good one.
So yes, it is important for individual investors to create a more vibrant financial markets. And we have seen there's that need, there's the interest. But what has really been the challenge is a lack of sufficient information. From our study, we have seen that the individual investor, the retail investor, they do their own personal research, a majority of them, rather than relying on perhaps a professional investment advisor. However, there's still the challenge of there's insufficient information to aid in making informed decision. Maybe it could be a skills deficiency, lack of a proper way of doing the personal research. So we have seen that if this is tackled, then it will aid in the growth of investment and on an individual basis in the financial markets. Especially the capital markets in this case.
So from where you sit, you believe that vibrancy can be achieved?
Yes, it can be achieved. It can be achieved, and that is one of the reasons why we did the research, because we feel that once that is addressed, it will aid in propelling the capital markets forward, and also in terms of people want to earn an extra shilling. So there's that, we identify that there's that gap.
I have to ask you this question before we get into some of the details you came out from your research. And I know I'm putting you on the spot based on the fact that you're also an institution in this market under the government as well. Are we sufficiently, for the sake of the viewers, are we sufficiently structured to enable us to achieve that vibrancy? Do we have the institutions that should be there to enable us, or sort of like a foundation, skyrocket to what we're talking about?
I believe we are, and as in the capital market industry and on the side of regulation, you see, the side of regulation has a goal of boosting investor confidence, and that means you want to enhance trust in the market. So having regulations, we have the Capital Markets Authority, we have ICIFA as the regulator of the professionals who are actually charged with managing this money in the capital markets. I believe there is proper structure when it comes to regulation, because it builds that trust. Because we found that some of the respondents were vocal on the matter of there's that trust that is needed in the market, that is covered by, in the case of regulation. And it is important for the public to know that there is indeed regulators in the capital market space that is focused on promoting investor confidence, and that way you feel that your investments are safeguarded if you invest in the capital markets.
Certainly being safer there. Being safe in terms of investments. Let's talk about the products. This is a market, as you say, and so from just sitting down as anybody who could be viewing, do we have enough of those products? Do we have enough nyanyas, vitungus, and everything else? I'm talking about diversification. From where you sit, and I know you sit at a place where you're able to look at the globe and see what other nations in other different continents are offering. Here in Kenya, do we have enough of that diversifications for Kenyans to really tap into this?
I believe there's enough diversification, and as much as we want to benchmark with, say, the developed markets, you see, we have to be aware of our environment, our investor environment. We need to have products that are applicable to various market segments in terms of income earned, in terms of the knowledge, the skill set, in terms of stability, in terms of what people are looking at in their investment. And in the capital markets here in Kenya, I believe diversification is, we have enough diversification for the public, individual investors to explore.
So let me jump into a bit of what we can call perception. And from where you see it as well, and from your research, is the capital markets still being viewed as elitist?
Maybe I will say yes and no. But yes, because from some of the responses we got from our research, the challenges that retail investors face is that perception of it's an urban area kind of investment product. If you go to the mashinani there, it will be difficult to tell them capital markets products they do not understand. And even if you say shares, they will think shares in other definitions, not in relation to the capital markets. So there is still that gap. And what we have been trying to explore and engage with professional investment analysts is perhaps we need to have programs that are vernacular based, or that really water down the jargon, the investment jargon, for people out there to understand and to be brought on board in the capital markets.
So in fact, you've just touched on my next question, which was about now really going down to the research and what you found out, getting down to the retail market, as we're calling it. And this is investor education. And I like what you've touched, that we need to go to even speak their language, whatever they are. But then I'll ask you, from your personal perspective, I think we have been yearning for this and this. What are these challenges that we're facing for us to not get down there?
Actions speak louder than words. So I feel the first point is to really act, and maybe as all the financial services regulators and capital markets regulators, we need to join hands and really find a way of this, nailing this investor, having an impact in investor education, because from time immemorial, that has always been a challenge. There's insufficient financial literacy, and how do we better communicate to persons who are not necessarily in the investment space to invest in the capital markets products. So I think it will be action. We really need to get to the point of even having a broader financial literacy awareness. It can be through through forums, through even Huduma centers. Perhaps we should be setting up like professional financial advice booths where any mwananchi can come in, because yes, there's much that a roadshow can have impact, but there are other things in addition to that can be done, like just mentioned. Perhaps we could explore the Huduma centers, because even other professions we have seen that they even have a whole week where they give their professional services for free. So maybe in the case of professional investment advisors, perhaps we could explore that idea of having our professionals in all these centers around the country, just to sensitize any mwananchi who wants proper guidance in investment advice, because we see in the newspapers every other day. So I think it's a matter of time we look beyond, we get out of the box completely and look at avenues, ways that will work, like what I have just suggested, and really tackle this financial literacy deficiency in the country.
I love that. Let me just put you on the spot and ask you, because we have the vernacular stations, that's a take. We have products that are amazing that could make people an extra dime and probably even make their wealth all the way to retirement. That's a tick. So the products are there, the media is there, the institutions to regulate are there, but we still are seeing a low uptick, if I may use that, from the retailers. Is there a cost thing probably that is maybe demanded by the media sector that would promote such marketing for people to understand? Is that a challenge in itself, maybe? Because we're talking about investor education, and yet we have all the infrastructure. Because right now, for news to fly to every corner of this country, it is possible. That means the channels are there. Is it a cost factor? I'm just trying to brainstorm with you, and I know this is a conversation, as I told you, we're going to have. Is it a cost factor, and probably should the government probably chip in? Because even when Kenyans invest, the more the merrier, even for them, from the tax point of view, from even the economic growth. I don't know, what do you see?
Yeah, I believe cost is that barrier to entry in terms of being more vocal in the media space, because of course it's not for free. And for it to be effective, you need weekly sensitization for people to really get that message. So perhaps it's an area the media stations need to look at and see for the benefits, and if we need support from the government, if there will be, we need to look at the output. The output will be more money coming into the capital market space, therefore boosting economic growth. Then maybe we need to look beyond that cost and see how we can.
And maybe also explore partnerships as well with them.
Explore partnerships.
For a win-win situation.